Okay, let's talk about buying a home. It's got to be one of the most exciting things you can do, right? But let's be real. That giant stack of paperwork and the nagging fear of hidden fees, that can be completely overwhelming. So we're going to dive into a powerful tool that was literally designed to have your back. You know that little voice in the back of your head? The one that wonders if you're being overcharged or if someone's getting a secret little payout from your deal? Well, that's a totally normal fear. But the good news is you have way more power in this situation than you probably think. And that power comes from a federal law called the Real Estate Settlement Procedures Act. But everybody just calls it RESPA. The best way to think about it, it's your personal toolkit for a fair, transparent, and honest home buying process. So here's our game plan. We're going to walk through the 4 most important tools in that RESPA toolkit. We'll start with a huge anti-kickback rule. Then we'll get into your rights and choices, see how RESPA protects you long after the ink is dry, and then we'll wrap it all up with a super handy cheat sheet. All right, first up, the big one, Section 8 of RESPA. This whole section is about stopping shady deals that could secretly inflate your closing costs. So how does this actually work? Well, RESPA makes it flat out illegal for, say, your lender to get a kickback just for sending you over to a specific title company. It also bans things like fee splitting, where 2 companies share a fee without actually doing any extra work. Now, what is allowed? Paying people for services they actually did. That's the key phrase right there. It means your costs aren't being secretly padded to pay for a referral. The bottom line is this. Section 8 makes sure that every single dollar you spend is for legitimate earned service. You're paying for the actual work, not for some secret handshake deal happening in the background. And we're not talking about a slap on the wrist here. This law has some serious teeth. Violating the anti-kickback rule can lead to criminal charges, including fines up to $10,000 per violation. And here's where RESPA puts the power directly in your hands. If you get hit with an illegal fee, you actually have the right to sue, and you could potentially get back up to 3 times the amount of that charge. Now, that is a pretty big reason for everyone to play by the rules. Okay, let's move on to the next part of our toolkit. RESPA is also designed to put you firmly in the driver's seat for some really key decisions. We're talking about Sections 9 and 10. Now, this is a right you might not even know you have. Under Section 9, a home seller cannot, I repeat, cannot force you to use a specific title insurance company. It has to be your choice. Why would they care? Well, maybe they have a business deal with that company. But RESPA says nope. You have the right to shop around and pick your own. And if a seller breaks this rule, they can be sued for 3 times the cost of the title insurance. And in case you're wondering, what exactly is title insurance? Think of it like a shield. It's a one-time policy that protects both you and your lender from any surprise ownership claims or hidden debts tied to the property's past. It's what ensures that the home is truly 100% yours. All right, next up is Section 10, and this one is all about your escrow account. You know, that special account your lender sets up to pay your property taxes and insurance for you? Well, RESPA makes sure they can't use it as their own personal piggy bank. The rule here is super specific. Your lender is allowed to keep a cushion in that account, but that cushion can't be more than 1/6 of your total annual payments. In other words, just 2 months' worth. This is a huge deal because it stops them from holding excessive amounts of your money hostage and, keeps more of it in your pocket. So, RESPA's job isn't done just because you got the keys. The protections continue for the entire life of your loan, thanks to Section 6. This part is all about your mortgage servicer. That's the company you send your payments to every month. So what happens if you find a mistake on your statement? Or maybe you just need some information about your loan. Before RESPA, trying to get an answer could feel like shouting into the void. Not anymore. Section 6 puts a strict clock on your servicer. If you send them a written request about an error or ask for info, they are legally required to acknowledge it within 5 business days. Then they have to actually investigate and fix it or explain why it's not an error within 30 to 45 business days. No more being ignored. And there's even more. Section 6 also puts limits on things like crazy late fees and something called force-placed insurance. That's when a lender buys a super expensive policy for you if yours lapses. It also requires them to help you out if you fall behind, and this is a big one. It stops them from pursuing foreclosure while they're supposed to be reviewing your application for help. That's a practice called dual tracking, and RESPA says no way. Okay, I know that was a lot of information, so let's boil it all down into one simple, easy-to-remember cheat sheet. This is really the heart of what you need to know. Let's run through it. Section 6, your loan servicer has to be fair and responsive for the whole life of your loan. Section 8, you're protected from paying for illegal kickbacks. Section 9, you and only you get to choose your title insurance company. And Section 10, your escrow account is safe from being overstuffed with your money. And really, that's what this all comes down to. RESPA is a powerful law that gives you, the home buyer, the tools and the confidence you need to handle one of the biggest financial decisions of your entire life. Knowing these rights really does change the game. It takes you from just being along for the ride to be an empowered, informed consumer. So I'll leave you with this. Now that you're armed with this information, what's the very first question you're going to ask?